Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 21st of September, and obviously not a great day for the stock market, various issues at the moment, but starting off with Gunsynd, and you can see that broken the recent 1.2 pence resistance zone. End of day close today above the initial September resistance of 1.29 would be a good momentum trigger to then target the long-awaited price channel top, which we were looking for, top of the December channel at 1.8 pence, hopefully over the next couple of weeks. At this stage, really only back below a penny, really delaying the upside scenario. But you can see that the 50-day and 200-day moving averages have crossed to start this week, and so that should provide a bit of extra positive momentum for the shares. One of the heroes of the year to date, Novacyt, which I think was spotted here around 20 pence and way back in January, which seems like an eon ago. Current situation here is that we've had an inside day breakout from Friday's basically inside day, obviously within the ranges of Thursday. What we'd like to see today is an end of day close above Thursday's high at £4.10 to reaffirm that we are heading up to that May resistance line projection currently at £4.80. Big picture target for those who love the stock up to £7, but obviously that's still a long way to go. In the near term, £4.10 plus is what we'd like to see on an end of day close basis. New stock for this selection, or for the selection in general, is Pennant Group, which hopefully will appear in a minute. Pennant International. Looks as though we've got the beginnings of a falling wedge breakout. So an end of day close 33 pence plus above that July resistance line could take us to the top of the broadening triangle at 54 pence. That's the March broadening triangle. And upside valid while we hold obviously above the near-term support at 30 pence. But it looks like we've got bullish divergence and the falling wedge, so that hopefully even in current horrible market conditions could be enough to get the shares to rally over the near term. 54 pence hopefully over the next 1 to 2 months. On to one of the more exciting situations at the moment, supply at Me Capital. We had a nice flurry up to the 0.8 pence level to start the session, come back a bit now, but I suppose while we remain above recent 0.54 resistance on an end of day close basis, still looking for the break to the upside from August to continue. We've got this symmetrical triangle, top of the triangle is 0.72, so you've got 0.54 as hopeful support, 0.72 as the breakout level. If we hold above 0.72 on an end of day close basis, looking for the top of the June channel there on the daily chart as high as 1.2 pence over the following 4 to 6 weeks. RSI at 57, so looking quite in quite a good place in terms of being a leading indicator on the upside at the moment. At this stage, only really sub 0.5 pence, really delaying the upside argument for supply at Me. More straightforward situation perhaps at Integument. Here you can see on the daily chart that we've had progress after the bounce off the 34-day moving average, the yellow line there. Overall, we've got a rising trend channel, which one can draw from, I suppose, back at the end of July. Top of the channel currently pointing to 55 pence, and that target valid, especially while we hold above the 20-day moving average at 36 pence on an end of day close basis. So hopefully 55 pence seen by the end of next month. More obscure stock to look at now, which is Starvest, but certainly looking good in terms of the bull argument at the moment, which looks like we're getting a mid-move bull flag breakout, so an end-of-day close above the initial September peak at 22 pence could be enough to take the shares on for a fresh leg to the upside and move to the top of the February trend channel as high as 35 pence plus, and hopefully that could be seen by the end of next month. At this stage, only really back below 15 pence in the June peak, really delaying or even cancelling the upside scenario. In current difficult conditions, maybe the best thing to look at is look at stocks which are in a decent trend, touched on expiration, currently breaking to new near-term highs. The August peak there, 77 pence, an end-of-day close or a weekly close above 77 pence at the end of this week could take the shares up to a 2-month target at the top of the February price channel as high as £1.20 over the near term. Stop loss on the buy argument at the moment, back below the 50-day moving average and the 2020 price channel floor at 70 pence. So reasonable risk-reward set up there. Stock which spiked up at the end of last week. I thought I'd just look at the technical position for the shares. Good follow-on from Friday's move after the gap higher. And the view here is that at least while we hold above former resistance from August last year at £1.54, we could hit that November resistance line projection as high as £2.50 over the next month or so, although obviously this is not perhaps the kind of stock which would be the most liquid or have the most friendly spread. Finishing off with a rather more friendly situation, which has been a good friend of the Bulletin Board Heroes, which is Alien Metals. Here we've got the shares in this consolidation mode now, above the 20-day moving average at 0.65, and we're looking for at least a retest of 0.9. Want to see an end-of-day close through 0.9 to open up the prospect of a fresh leg to the upside in that November resistance line projection as high as 1.6 pence, hopefully by the end of next month, if we can get a reasonably swift close through the 0.9 pence area. But the bull argument still in place while we hold above 0.65 for Alien Metals. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.